Have to put that under a big
Hello, everybody,
mixer,
and welcome
and
to.
5 gallon, less than 5 gallons is difficult. So I'll need to speak with you about that. Please give me a call, 401-769-6700. Thanks.
And how is everybody doing today? It is a lovely day here at Option Pit. We'll have some more Saturday classes and things like that for you coming out on the schedule very soon. Our web rollover is making progress. And blog yesterday, how long can stocks ignore bond market volatility? Well, it was 2 days, and now it looks like it could be 3 days, right? Where VIX trading lower, volatility futures trading lower. All I can say with that is you got to follow your nose, and right now, stocks still are under the QE influence from Europe. It isn't going away. And they are, for the most part, ignoring the gyrations in the bond market. This is one of the first times, maybe in history, I'm not quite sure, but thinking back where you had sort of the bond markets and equity markets both at fairly high levels. Obviously, U.S. equities near a highest all-time, if not closing on the highest all-time maybe today. And bonds with yields, 2%. This is like the 1950s. So maybe we have to look back to the 1950s for the last time equities were pretty expensive and bond yields were so low. Also at the same time, as recall, the 50s, the U.S. government was trying to unwind the massive debt from World War II. So maybe there's a parallel, don't know. But historically, at least, I do think we have, though, historically low rates. So either that, so we've had over the last 2 years since they started with the U.S. trying to decide whether they're going to get out of QE or not, equities for the most part, at least for 2015, have pretty much stopped moving up without the QE influence, it seems, until we have better sort of macro news, growth, global growth, whatever. It doesn't look like we're getting to those, massive equity spikes. Although anytime there's a hint of rates not rising soon enough, we gap fast. So, but you have to take the signals you're given, and right now the signals we are given is VIX is on the way to 13. The volatility futures are holding up with a fair amount of premium still in them to May. The May future right now, just looking here, as things start to, we have expiration on Wednesday, and that's still, right? Still a fair amount, right? 92 cents. The June future actually 280. So starting to discount, again, discounting these drops in vol once we get to a certain level. This June future getting too far below 16 is very difficult. So while there's nothing unusual about that, it makes any lift in VIX basically absorbed by the future prices at this point. So if you're looking for the vol products to play an upside spike in volatility, there's a lot of squishiness in there. They're not really going to perform very well. So we're going to keep on track at Option Pit. We'll be looking for, I think I want long, slow delta trades at this point with just blowout protection. And that's the stuff we're going to look at in our chat today. As far as the bond market goes, maybe this is just now the new level where rates aren't just going to see those absolute lows anymore. Nobody wants those positions. And if the news out of Europe continues to get better, they deal with Greece, that's probably our next catalyst higher. And like I said in the blog, Greece is making a lot of noise with one hand, yet they're making all their payments with the other. So clearly what they might be saying is one thing, but the intention, at least right now, is to not default and stay in the euro. And with that, I'll just take our cue from the bond markets. If you start to see this volatility slip, I had a position in the blog yesterday I thought makes a lot of sense for bonds. You almost trade it like two different things. You could trade a back spread near term and be short volatility way out here. And trade it like two different positions essentially. So we can look at that in the chat today. But we have other things I like to look at as well. So I don't expect, unless something really off the curve comes, VIX will continue to stay soft. Probably 12.5 probably is the low that we might see Friday. But it could, again, range from 12.5 to 14 easily, which is essentially what the VIX futures are saying right now till expiration. All right. And with that, I will see everybody in the chat today, and you'll have Mark this afternoon. You guys have an excellent day.